Morning, Good morning, everyone. It gives me immense pleasure to extend you a very warm welcome on behalf of Department of Computer Science, Sindhi College, who has clubbed all of us for the state level webinar on Basics Accounting Principles of Beginners. Now, I kindly request you all stand up for the prayer song followed by Tamil Thai Valthu.
Madam Gayatri Mandra, madam. Oh. Madam, Gita, madam. Gayatri Mandra, madam. Gayatri Mandra.
Thank you all. Now I would like to call upon Dr. Saraswati Ma'am, Associate Professor, Department of Computer Science, to present the welcome address. Good morning to one and all present here. On this pleasant morning, we are all gathered here to participate in the state level webinar program on basic accounting principles for beginners, organized by Department of Computer Science, Sindhi College, in association with IQAC. I take this opportunity to welcome our management members, our beloved principal, Dr. K. Satyanarayana sir, IQAC coordinator, Madam Dr. B. Hemalata, head of the department, Computer Science, Madam Mrs. T. Sujata, HODs of various departments, faculty members and students of Sindhi College. I extend my warm welcome to all the participants across the country for this state level webinar. I wholeheartedly welcome our chief guest, Mr. S. Rajendran, Assistant Professor, Department of Commerce, Sindhi College, for the state level webinar. Fortunately or unfortunately, we are undergoing this tough situation. Hope all you are fine. Once again, I welcome all for this wonderful webinar. Thank you, ma'am. I would request the most honorable personality of our Sindhi College, Principal Dr. Satyanarayana sir, to present the presidential address.
சாரி மேடம் பேசுறாங்க சார் பேசிக்கிட்டே இருக்காரு முடிச்ச உடனே பேசணும்னு சொல்லி முடிச்சிட்டு பேசுறான்னு சொல்லி ஓம் குருப்யோ நமஹ. Respected Head of the Department of Computer Science, Madam Sujata, organizers of this function, Chief guest of today's morning, Professor S. Rajendran, Department of Commerce, Sindhi College, other participants who are participating in this webinar, and my dear students. It gives me very pleasure to be with you on this occasion to talk to you about the importance of accountancy in everyday's life. Definitely, we all need to understand the importance of accounts, how we have to manage the funds, the inflow of funds, the outflow of funds, how we need to allocate the funds, how we need to find the priorities. All these things are very much necessary in our day-to-day life. So these are some of the basic concepts that Professor Rajendran is going to talk to you, and he'll be going to highlight the importance of accountancy, because without accountancy, without accounts, nothing is there in the life. I would like to highlight an important thing in this situation. Any student of computer science has to cater the needs of everyone under the earth, because now the computer science has become a service sector. When we divide the computer science into two parts, as one as the pure computer science and the other being the applied computer science, there's lots of research is going on the pure computer science, which is the foundation for the applied computer science. And every computer person is going to cater the needs of everyone in different dimensions, in different directions, and in different capacities. So naturally, a computer scientist or a computer personnel must know the basic accountancy. Then only he may be in a position to help the organization where he'll be going to work. So definitely, the webinar that will be going to conduct by our Professor S. Rajendran will be helpful to us. And I request all the participants to make a note of the things what the Professor Rajendran will be going to talk to you. Not only that, he is a nice person, having a lot of knowledge, very friendly, very accommodative, and very knowledgeable. He can help you and you can ask any doubts without any hesitation. He will help you and he will guide you. He will solve all your doubts. Thank you very much for the opportunity given. I wish all of you a very, very best. Thank you very much.
Thank you.
Thank you very much, sir. Now I would like to call upon Program Convener Dr. Geeta Ma'am, Associate Professor of Department of Computer Science, to introduce the chief guest.
Good morning, all of you. Good morning, sir.
Morning, ma'am.
Today's webinar, chief guest and resource person, Mr. Rajendran, sir, and the PG Department of Commerce in Sindhi College. And he has got a teaching experience, undergraduation is 29 years, post-graduation in 6 years. And he also presented so many papers, both seminar and conference. International level, he presented 2 papers, national level 4 papers, state and regional level 1 paper. He also published a book and a MBA guide and supervisor under the Bardiyar University. And a seminar organized under one-day national level faculty development program webinar on emerging trends in HRM after COVID-19 on Friday, August 9th. As well as MCOM degree, project regular, MBA degree, project IDE. He got awarded 70 and 20s. And paper setter and examiner also he participated under the Pondicherry University, Bardiyar University, Madurai Kamaraj University, University of Madras, as well as the Periyar University. And he also participated under the lesson writer under IDE, Madras University and Tamil Nadu Open University, Chennai. Served as an external additional chief superintendent for conduct of university examinations, NSS program officer of Azan Memorial College Unit Chennai, program coordinator, Sindhi College of Arts and Science. At the last but not least, this is a very important role. He already conducted some of the webinars, national level webinar on indirect taxes conducted by Vishwasena Arts and Science College. Second, also he conducted national level webinar on operational strategic transformation of HRM conducted by Kanji Sri Krishna College of Arts and Science College. Speaker in a national level students webinar on a GST overview at the Maharaja Postgraduate College. So these are all the main role. He and conducted so many various webinars as well as so many roles under the education level. Thank you, sir. Thank you very much, sir.
Thank you, madam.
Thank you, ma'am. Now I request our distinguished chief guest, Mr. S. Rajendran sir, Assistant Professor, PG Department of Commerce, Sindhi College, to address the gathering. Sir, please.
Okay, thank you, ma'am. Good morning. Good morning to all. First of all, thank you. Okay, to our Honorable Principal Sindhi College, Dr. K. Satyanarayana sir, for giving that opportunity to deliver the webinar to our students in BSc Computer Science. And more importance for Mrs. Sujata ma'am, HOD of Computer Science, for giving the opportunity for they're conducting the webinar for basic accounting principles of our students in state level. And Mr. V. Murugavel, program coordinator, Dr. K. Geeta ma'am for the convener, and all the staff members of Computer Science Department of the Sindhi College of Arts and Science, and all the HODs of the Sindhi College and staff members of our Sindhi College and participants. I will going to start some information relating to the basic accounting principles for and the non-commerce and commerce graduates, students and faculties also. So I will display that slides. Saraswati ma'am, view the slide, ma'am. Geeta ma'am. Hello. Geeta ma'am. Hello. Geeta ma'am.
Yes, sir.
Slide 3, madam.
Yes, sir. Yes, sir.
Okay, madam. So that basic accounting principles for beginners. So we have some content for 25, introduction, origin and growth, meaning and definitions of accounting, bookkeeping and accounting, accounting and accountancy, nature of accounting, objectives of accounting, and uses of accounting and users, role of accounting, limitation systems, single and double entry systems, preparation of journal, ledger, trial balance, trading account, profit loss account, and a balance sheet also. So the next slide goes to what is accounting for the beginners. So the every peoples are need the basic accounting principles. So here the accounting has rightly been termed as the language of a business. So you can find out that business how we are doing it, if maybe in a profit or a loss, we can how to find out. We can preparation of the proper system of the accounting system. The basic function of a language is to serve as a means of communication. Accounting also serves these functions. It communicates the results of business operations to the various parties like stakeholders of the business and proprietors of the business owner, creditors, investors, government and other agencies follow that business and weightage of business or result of a business, maybe in profitable or losses. Though accounting is generally associated with business, but it is not only business which makes use of accounting. Persons like housewives, government, and other individual also make use of accounting systems. For example, a housewife has to keep a record of money received and spent by her during a particular period, maybe a day or week or a monthly period. Every housewife will collect the money from her husband to spend the household expenses, and they are also reporting and the preparation of, and that is called a recording. She can record her receipts of money on one page of her household diary. So every housewife also making the diary system. All the peoples are making that entry of expenses and receipts. While payments for different items such as milk, food, clothing, house, education, etc., on some other page or pages of her diary in a chronological order, such a record will help her to in working about what are the amounts are spending in yearly. So here, the sources from which she received a cash and the purposes for which it was utilized. So sources and uses, it is two sides of account, one a debit and a credit. So what are the various sources? So only for that sources for housewife, she'll collect money from her husband and maintain the records to spend and utilize it properly and hand over the balances to her husband. Whether her receipts are more than her payments or vice versa. Sometimes shortages of money are received from her husband. Suppose we can spend more money. So anything will be happen on the basis of depending on a price level, the changes. Now that COVID-19 pandemic period, the expenses are increases. So the shortage of money received from our husband. So this also very important for the every people. The balance of cash in hand or sometimes a deficit, if any, at the end of a period, maybe daily or weekly or monthly, how much the balance, end of the period, closing balance of cash, or sometimes deficit of money. In case the housewife records her transactions regularly, she can collect valuable information about the nature of her receipts and payments. So they can record the informations for the original receipts and payments. For example, she can find out the total amount spent by her during a period, say a year, on different items, say milk, food, education, and entertainment, etc. Similarly, she can find the sources of her receipts, such as salary of her husband, rent from property let out to persons, cash gifts from her relatives, and other receipts from her, and a way of genuine receipts from other people. Thus, at the end of a period, a particular year or day or month, she can see for herself about her financial position, that is, he owns or and what she owes. So, if have that surplus money in hand, or sometimes deficit of that money. So everything we can find out final end of the year. This will help her in planning her future income and expenses or making out a budget. So here budget, what is a budget is called expected revenue and expected expenses. So the sources. So the government also, they're preparing every year the budgets for various sources of income, direct taxes and indirect taxes, some any other sources of income, and a large number of sources of expenses. So this also government budget. So here family budget, we can make a budget they properly. The need for accounting is all the more great for a person who is running a business. So here we are running a business, we have started the business, we can contribute some amount of capital, and out of capital we can spend to purchase of machineries or a plant or any other material, maybe in a fixed nature, some expenses relating to current nature. So at the end of the year, what about that capital position of the business, maybe profit or loss. So next one, how he must know what he owns, what he owes, whether he has earned a profit or suffered a loss on account of running a business. So for business people, they are invest money for regularly or periodically or a daily or monthly. What about the end results? Maybe he has earned a profit or sometimes he suffered a losses. If losses are profit, what are the percentages? So maybe 10 crores of rupees are invested, we can get 40% of a profit, or sometimes 30% of a profit, or sometimes 10% of losses. So how to manage it? So the accounting is very important. What is his financial position? That is whether he will be in a position to meet all his commitments in the near future, or he is in the process of becoming a bankrupt. So we see the banks. Some commercial banks are maybe liquidated or going to wind up. What are the reasons? Their liability is more than that assets. So that financial position is very critical situation of some type of business. Some number, for example, Reliance Group or a Tata Group, or for a number of peoples, they are having more profitable business. Some companies, they are suffer the losses. So how to manage the business? So here the position of financial position is very important to find out balance sheets also. How much the assets are there, how much the liabilities are there. Assets equal to liability. So here next heading, origin, for the introductory of that people, those who are not having the accounting background or commerce background. Accounting is a world as money itself. So everything is the money concept, money measurement. Okay. However, the act of accounting was not as developed as it is today because in the early stages of civilization, the number of transactions to be recorded were so small that each businessman was able to record and check for himself all his transactions. So daily we need to record the informations for any small type of business, for a medical or grocery shop or vegetable vendors, roadside vendors also they maintain the records. Accounting was practiced in India 23 centuries ago, as is clear from the book named Arthasastra, written by Kautilya, King Chandragupta's minister. Arthasastra is also they maintain how to maintain the books. His book not only relates to politics and economics, but also explain the art of proper keeping of accounts, that is bookkeeping and accounting, how to manage the accounts. However, the modern system of accounting based on the principles of double entry system was its origin to Liso Pacioli, who first published the principles of double entry system in 1494 at Venice in Italy. So in 1494, that double entry system was introduced to Liso Pesoli, first published the principles. Thus, the art of accounting has been practiced for centuries, but it is only in the late 30s that is the study of the subject accounting has been taken up seriously. Now, everything is very easy to maintain the accounts for daily packages. Okay. So, meaning and definitions of accounting. The main purpose of accounting is to ascertain profit or loss. Okay, that's the main importance during a specified period of time, maybe in the financial year, 1st April to 31st March, to show financial condition of the business on a particular date and to have control over the firm's property also. So every year you go to see all the companies or publish the financial report, profit loss account and trading account, profit loss account, balance sheet. Some type of banking also there is in balance sheets also. So you can find out the assets value and the liability for increasing or decreasing the liability for previous years of operations, maybe in a 5 years, minimum 5 years. So you can find out the ratios analysis for assets and liabilities, profits, gross profit or net profit, maybe increasing trends or decreasing trends. Such accounting records are required to be maintained to measure the income of the business and communicate the information so that it may be used by managers, owners, and other interested parties. So other peoples that become an investors or the public people. Accounting is a discipline which records, classifies, summarizes, and interprets financial information. That is very important. Collect the information and everything to be recorded, maybe a single entry system, and after that single entry is transferred to double entry system, and it classifies in the heads of the nature of expenses and incomes, and summarizes for the data and interprets the financial information for that is called a conclusion given to the management. Information about the activities of a concern so that intelligent decisions can be made about the concern. So it is also very important for accounting for the future period of time. Here, one more definition. The American Institute of Certified Public Accountant has defined the financial accounting as the art of recording, classifying, and summarizing in a significant manner and in terms of money transactions. So accounting is also terms of money. So you go to see the banks, They deposit and withdraw money and lendings. Deposits from collected from various sources of the people, and the lending money for the different sources of the people. So money is very in terms of money transactions and events which a part at least of a financial character and interpreting the results thereof. And American Accounting Association defined accounting as the process of identifying, measuring, and communicating economic information to permit informed judgments and decisions by users of the information. Who are the users? Businessman, or government, or public, or investors. The people's or needs the information about their concerns. Okay. From the above, the following attributes of accounting emerge: recording, classifying, summarizing, interpreting. So how to record the transactions? It is concerned with the recording of financial transactions in an orderly manner soon after their occurrence in the proper books of accounts. So we can different kinds of books are to be maintained for sales day book, purchase day books, debtors, credit sales or credit purchases, bills receivable, bills payable, and the books are maintained. Classifying, it is concerned with the systematic analysis of the recorded data so as to accumulate the transactions of similar type at one place. This function is performed by maintaining the ledger in which different accounts are opened to which related transactions are posted. Suppose salary, you can pay the salary to the employees, so you can open the salaries account. We can pay the rent for the buildings or premises, we can open the rent account, or we can deposit the money to banks to open the bank account. So the class that various type of ledgers are to be opened. Before the ledger, journals are to be prepared. Summarizing, it is concerned with the preparation and the presentation of the classified data in a manner useful the users. The function involves the preparation of financial statements such as income statement, various sources of income, balance sheet, statement of changes in financial position, statement of cash flow, statement of value added. So, can preparing the different type of the statements, first one income statement and the balance sheet, changes of financial position for the particular period of time, statement of a cash flow, and value added of assets. Interpreting, nowadays, the aforesaid three functions are performed by electronic data processing devices. Now we can use the tally system, and the accountant has to concentrate mainly on the interpretation aspects of accounting. The accountant should interpret the statements in a manner useful to action. The accountant should explain not only what has happened, but also why it happened and what is likely to happen under specified conditions. So the accountant knows about what to happen that accounting the performance are not performed. So the accountant and the auditor's report. Okay, finally, the reports is very important. What are the going on the assets of the business. So, and the next one, bookkeeping, the basic one for accounting. Bookkeeping, distinction between bookkeeping and accounting. Bookkeeping is a part of accounting and is concerned with the recording of transactions, which is often routine and clerical in nature. We can maintain the records for every transaction to be written in any one of the forms, whereas accounting performs other functions as well as measurement and communication besides recording. So bookkeeping is very important for recording all the transactions, non-scientific method. Accounting is a scientific method. An accountant is required to have a much higher level of knowledge, conceptual understanding, and analytical skill than is a record of the bookkeeper. An accountant designs the accounting system, supervises and checks the work of the bookkeeper, prepares the reports based on the recorded data and interprets the reports. So the accountant duty to preparation of records. Nowadays, he is required to take part in matters of management, control, and the planning of economic resources. So the bookkeeping and accounting is very important. Bookkeeping is the preliminary steps for recording all the transactions in a one particular ledgers. The accountant duty to evaluate the informations regarding to different heads of the account. And accounting and accountancy, a distinction between accounting and accountancy. Although in practice, accountancy and accounting are used interchangeably, yet there is a thin line of demarcation between them. The word accountancy is used for the profession of accountant. Accountant profession is maybe chartered accountant, okay, CA, who do not work, who do the work of accounting and are knowledgeable person. So bookkeeping, any persons are maintain the books of accounts. The accountancy is also having, accountancy is a profession. They are having skilled knowledge. Accounting is concerned with the recording of all business transactions systematically, and then arranging in the form of various accounts and financial statements. So systematic accounting is called a double entry system. We will discuss later. And it is a distinctive discipline like economics, physics, astronomy, etc. The word accounting tries to explain the nature of the work of the accountants, that is a professional people, accountant as a profession. And the word accountancy refers to the profession these people adopt. So the professional peoples adopt the accountant, okay, like the lawyer, engineers, and other people. He is also professional. Nature of accounting. The various definitions and explanations of accounting has been propounded by different accounting experts from time to time. And the following aspects comprises the nature of accounting. So the changes for accounting are standard, Indian accounting standard or American accounting standard. We can refer that the standard may be changes or they may be continued. First one, accounting as a service activity. Accounting is a service activity. It is a function to provide quantitative information, primarily financial nature, about economic entities that is intended to be useful in making economic decisions, in making reasoned choices among alternative courses of action. It means that accounting collects financial information for various uses for taking decisions and tackling business issues. Lot of business issues are there. So maybe losses or any and it money lack of funds, the banks are making the problem, the creditors or debtors are making the problem. Everything is there. Accounting in itself cannot create wealth enough. If it proceeds information which is useful to others. Others means all the peoples, we can find out the company's performance. How to find out the company performance? We can go through that financial reports and balance sheets. It may assist in wealth creation and maintenance. So you can continually for 5 years or 10 years, how to increase in the growth of assets of the firm, like Reliance or lot of companies, Tata and other companies, how they are increasing. The top 10 companies, top 100 companies. So any companies, they are maintain the status and financial position for any period during that situation also. Accounting as a profession next. Accounting is a very much a profession, accountant. A profession is a career that involves the acquiring of a specialized formal education is required before rendering any services. Accounting is a systematized body of knowledge developed with the development of trade and business over the past centuries. So accountant is become a profession. He has the systemized knowledge. The accounting education is being imparted to the examines by national and international organized and bodies like the Institute of Chartered Accountants of India, ICAI, New Delhi in India, and American Institute of Certified Public Accountant, AICPA, They are certified. The persons become the accounting profession, CA, Chartered Accountant. So accounting is a service activity. Accounting as a profession. Accounting as a social welfare. Now, how they creating the social welfare? In early days, accounting was only to serve the interest of the owners only. Under the changing business environment, the discipline of accounting and the accountant both have to watch and protect the interest of other people who are directly or indirectly linked with the operations of modern business. The society is composed of people as customer. The customer wants about the companies. Shareholders wants the company's performance for get the dividends. Creditors and investors also wants the financial status of the companies or a business. The accounting information or data is to be used to solve the problems of the public at large, such as determination and controlling of prices. Therefore, safeguarding of a public interest can better to facilitated with the help of proper, adequate, and reliable accounting information, and as a result of if the society at large is benefited. So every companies are give the accurate information are published to the public. So everyone knows about the companies, everyone knows about the government, every peoples are knows about the financial position of any company. So how to find out that position? We can collect the information from the accountant. That is called a reports, financial reports, profit loss account and a balance sheet. Accounting as a language. Accounting is rightly referred the language of a business. It is one means of reporting and communicating information about a business. So it is also the management or business people cannot explain to the individual people. So they publish the reports through profit loss account balance sheet. The balance sheet referred by the large number of people to find out the position of the business. As one has to learn a new language to converse and communicate, so also accounting is to be learned and practiced to communicate business events. A language and accounting have common features as regards rules and symbols. Both are based and propounded on fundamental rules and symbols. So, debit, personal account, real account, nominal account, some rules are there. In language, these are known as grammatical rules, and in accounting, these are termed as accounting rules. The expression, exhibition, and the presentation of accounting data, such as numerals and words and debits and credit, are accepted as symbols which are unique to the discipline of accounting. So that accounting data is very important. The numerals, amounts, and words, debit and credits, and assets and liabilities. It is also explained through the reports. That is called accounting language. Accounting as a science or art. The next question arises: if accounting or science or art, maybe science or art. Science is a systematized body of knowledge. It establishes a relationship of cause and effect in the various related phenomena. It is also based on some fundamental principles. So accounting have some principles. Accounting has its own principles. Example, the double entry system, which explains that every transaction has twofold aspects, that is debit and credit. Every transactions for one side debit, another side is credit. So two sides are to be tally. It also lays down rules of generalizing. So we can say that accounting is a science. Art recovers a perfect knowledge, interest, and experience to do a work efficiently. Art also teaches us how to do a work in the best possible way by making the best use of the available resources. That is very important. So here available resources, how to use the profitable way. Accounting is an art, as it also requires knowledge, interest and experience to maintain the books of accounts in a systematic manner. So we need basic accounting knowledge to manage the accounting yeah, for maintain the records. Everybody cannot become a good accountant. It can be concluded from the above discussions that accounting is an art as well as science. So art, science, both art and science are becoming account. Accounting as a information system. So how to give the information to that people? Accounting discipline will be the most useful use in the acquisition of all the business knowledge in the near future. You will realize that people will be constantly exposed to accounting information in their everyday life. So we are also. We are started from a house to the job or a working place. How much amounts to be spending? So we can manage the accounting for every day's life. How much amounts of the students' life also. The students are getting pocket money from the parents and they spend for the daily expenses. Finally, how much the balance or kept in by students. So we can manage the records. Accounting information serves both profit-seeking business and non-profit organizations also. So here, profit-making companies or business, like all the companies are profit-oriented. Non-profit NGOs, trust societies, they also maintain income and expenses, receipt and payment account. They need total receipt of the particular year, total expenses of a particular year, how much the amounts of balance. The accounting system of a profit-seeking organization is an information system designed to provide relevant financial information on the resources of a business and the effect of their use. Information is relevant to and available if the decision makers can use it to evaluate the financial consequences of various alternatives. Accordingly, according generally does not generate the basic information that is raw financial data. Rather, the raw financial data results from the day-to-day transactions of the business. As an information system, accounting links and information sources are transmitted, generally the accountant. A channel of communication, generally the financial statement, and a set of receivers, external users. So it is also one way of information system. The systems are also delivered by the accountant and various channels are used through the financial statements are published by the newspaper or e-papers, electronic papers, and the viewers of various type of people, like government, public, consumers, or competitors also. And the next one, what are the objectives? The following are the main objectives of accounting to keep systematic records to protect business properties. So how to keep the records? Accounting is done to keep a systematic record of financial transaction. It is very important. Not bookkeeping. We can maintain the records. In the absence of accounting, there would have been a terrific burden on human memory, which is most causes, would have been impossible to bear. So memory, sometimes memory loss. We can spend money for the last payment. How can we can find out how much amounts are spent? So we can record the informations properly to protect the business properties. Accounting provides a protection to business properties from unjustified and unwarranted uses. This is possible on account of accounting supplying the following information to the manager or the proprietor. So the business are supplying what are the information? The amount of the proprietor's funds invested in the business, that is a capital. The proprietors invest money to the business. How much the business have to pay to others? The expenses of buying machineries or a plant or construction of industrial set and some other expenses for fixed and current. How much the business has to recover from others? They received from the sale of goods or services we can collect from others. How much the business has in the form of fixed assets, cash in hand, cash at the bank, stock of raw materials, work in progress, and finished goods. This also properties. Also fixed assets. How many assets are purchased? Land, building, machineries. There comes under fixed assets, cash in hand, cash at the bank. This is called a current assets. Stock of raw materials. How much amount of stock of raw materials in a hand? Work in progress. That is called a semi-finished products. And a finished goods. How much? Everything to be recorded properly. Information about the above matters helps the proprietor in assuring that the funds of the business are not necessarily kept idle or underutilized. So you can spend our 100 rupees, so equal to some any assets or any other type of properties are kept by the peoples. So this is also very important. And to ascertain the operational profits or losses. Accounting helps in ascertain the net profit earned or loss offered on account of you carrying the business. Sometimes you are earning more profit, sometimes you are not able to earning profit, suffering loss. This is done by keeping a proper record of revenues and expenses of a particular period. So you can maintain the particular period, it means the financial year. So 1st April to 31st March. The profit and loss account is prepared at the end of a period. And if the amount of revenue for a period is more than the expenditure incurred in earning that revenue, there is said to be a profit. Suppose income is more than the expenses, a profit. In case the expenditure exceed the revenue, there is said to be loss. So find out the profit or loss. We can make the proper recording of accounts. Profit loss account will help the management, investors, creditors, etc. In knowing whether the business has proved to be remunerative or not. So that business records. So the profit loss account help the management, investors. What are the management? How to help the management? The management are earning the profit. If earning the profit, they are again investment the money to the business. The investors also watching the organization are having profitable or not profitable. The creditors also watching, knowing whether the business has proved the remunerative or not. In case it has not proved to be remunerative or profitable, the cause of such a state of affairs will be investigated and necessary remedial steps will be taken. Suppose that profit ratio will be decreased, so we can take some steps to solve the problem. So next, fourth one, to ascertain the financial position of the business. The profit loss account gives the amount of a profit or loss made by the business during a particular period. However, it is not enough. The businessman must know about his financial position, that is where he stands, what he owes and what he owns. So if we are doing the business, we can find out the profit are earned for the particular period or suffering loss or anything. We can find out uh, finding that profit financial position is very important. The objective is served by the balance sheet or position statement is very important. The balance sheet is a statement of assets and the liabilities of the business on a particular date. It serves as a parameter for ascertaining the financial health of business to facilitate rational decision making. So we can making the decisions is based on the financial position and analysis given by the auditors. Accounting these days has taken upon itself the task of collection, analysis, and reporting of information at the record points of time to They record levels of authority in order to facilitate rational decision making. So the management collect the information from the auditors. After that, they're taking decisions is based on the financial reports. The American Accounting Association has also stressed this point while defining the term accounting when it says that accounting is the process of identifying, measuring, and communicating economic information to permit informed judgments and decisions by users of the information. Of course, this is by no means an easy task. However, the accounting bodies all over the world has particularly the International Accounting Standards Committee. So the committee is also formed international level to monitoring all the things. Have been trying to grapple with the problems and have achieved success in laying down some basic postulates on the basis of which the accounting statements are to be prepared. So, international accounting standards are giving guidelines to preparation of the accounting statements. Information system. Accounting functions as an information system for collecting and communicating economic information about the business enterprises. This information helps the management in taking appropriate decisions. This function, as stated, is gaining tremendous importance of these days. So information is very important regarding the financial position. Next, very important for users. Who are the users of accounting information? Investors, creditors, members of non-profit organizations, government, consumers, and research scholars. So how the people are using? The basic objective of accounting is to provide information which is useful for persons inside the organization and for persons or groups outside the organization, internal users and the external users. Accounting is the discipline that provides information on which external and internal users of the information may base decision that results in the allocation of economic resources in society. So here, who are the peoples or external users of the accounting information? The external users are those groups or persons who are outside the organization for whom accounting functions is performed. Following can be the various external users of accounting information or investors, creditors, members of non-profit organizations, government, consumers, and research scholars. What are the uses of investors? Those who are interested in investing money in the organization or interested in knowing the financial health of the organization, of know how safe the investment already made is and how safe their proposed investment will be. So that investors want to know about the financial position of the organization is also the external users. So the next one, creditors, supplier of goods and services on credit, bankers and other lenders of money. So one side creditors. You're also watching the position of the financial position of the concern. Want to know the financial position of concern before giving loans and or granting credit by the creditors. What are the uses of non-profit organization? The members of a non-profit organization such as schools, colleges, hospitals, clubs, charitable institutions also they find out that profit or loss or income or expenses. So the members of NGOs, non-profit, charitable, and other peoples also want to know about the financial position about the organization. What about government? Central and state governments are interested in the accounting information because they want to know earnings or sales for a particular period of purpose of taxation. So that is the main sources of income from the central and state government, direct taxes and indirect taxes like GST. So the government is also closely watching the enterprises or a business for imposing the taxes. For the examples for COVID-19 vaccination, so 12% are charged by GST to all the medicines or medical equipments for using the COVID coronavirus. So it's also major part of revenue. So any type of companies they are producing any type of product, they are imposing the taxes for collecting of money directly or indirectly. And what are the uses of consumers? So consumers need accounting information for establishing good accounting control so that cost of production may be reduced with the result reduction in the prices of goods and they buy. So consumers for the benefits for accounting, if the cost of production are less, the price is less. Cost of production is high, and the prices of a product will be high. So consumers wants know about the company's financial position. What about researchers? The research scholars, accounting information being a mirror of financial performance of a business organization is of immense value to the research scholars who wants to make a study of financial operations of a particular firm. Analysis, financial statement analysis, ratio analysis, fund flow statement, cash flow statement, and other statements are prepared by the research scholars. So next, internal users of accounting. Who are the people are internal users? Owners, management, employees. Though internal users of accounting information are those persons or groups which are within the organization. Internal users within the organization. Following are such internal users are owners, management, employees. So the owners wants to know that accounting. Owners provide funds for the operations of a business and they want to know whether their funds are being properly used or not. If properly used, we can get profit. If not properly used, the funds or capital, we are suffering the loss. The owners or needs the accounting information. Management, what are the needs? The management of the art of getting work done through others. The management should ensure that the subordinates are doing work properly. Accounting information is an aid in this respect because it helps a manager in appraising the performance of the subordinates. So the management wants know about the properly handling the informations. What about the employees? The employees are interested in the financial position of a concern they serve, particularly when payment of a bonus depends upon the size of the profits earned, the salaries, bonus, and other benefits. They seek accounting to them is correct. Role of accounting. Accounting plays an important and useful role by developing the information for providing answers to many questions faced by the users of accounting information, how good or bad in the financial condition of the business. Good condition or bad condition. He has business activity resulted in a profit or loss. How will the different departments of the business have performed in the past? So previous performance of the business departments, marketing or sales or production or advertisement or HR departments, what are the performance? Which activities or products have been profitable? So we can produce number of product. Some products are profitable, some products are not marketable, some product are highly marketable. Highly marketable, they are getting more profit. They are not marketable, there are no sales, no profit. So we can find out their product. Out of the existing products, which should be discontinued and their production will be production of which commodity should be increased. So it is also information relating to particular product. So in the sometimes the marketed product, unmarketed product, we can find out whether to buy a component from the market or to manufacturing the same. So manufacturing or buying and selling, make or buying decisions are taken by the companies. Whether the cost of production is reasonable or excessive, cost based. Cost means the incurred of expenses, direct and indirect expenses for manufacturing the product, maybe increase or decrease. What has been the impact of existing policies of the profitability of a business? So every business firm, they fix their own policy to making the profit. What are the likely results of new policy decisions on future earning capacity of the business? In the light of past performance of the business, how should it plan for future to ensure desired results? So the accounting is very important role for the all the aspects of the people. Limitations. So here, advantages discount accounting discussed in the lesson, not suggested accounting for free from limitation. Anyone who is using accounting information should be well aware of its limitations also. The following limitations are: financial accounting permits alternative treatments. Financial accounting is influenced by personal judgment, and these are the limitations are there. And the next one, systematic systems in accounting, cash system and mercantile system. The two types of. What is a cash system? Under this system, actual cash receipts and actual cash payments are recorded. Credit transactions are not recorded at all until the cash is actually received or paid. So credit records is also maintained in the separate accounts. The receipts and the payments account are prepared in case of non-trading concerns such as charitable institutions, a club or school or college, etc. And a professional man like lawyer, doctor, a chartered accountant, etc. can be cited as the best example for cash system. This system does not make a complete record of financial transactions of a business, as it does not record outstanding transactions like outstanding expenses and outstanding incomes. Maybe accrued income, accrued expenses are to be incurred. This system being based on the record of actual cash receipts and actual cash payment will be will not be able to disclose correct profit or loss for a particular period and will not exhibit a true financial position of the recorded in the books of account. So here these are maintained the cash system, and what are the mercantile system? Under this system, all transactions relating to a period for are recorded in the books of account. That is, in addition to accrual, actual receipts and payments of cash income receivable and expenses payable are also recorded. This system gives a complete picture of the financial transaction of the business, as it makes a record of all transactions relating to a particular period. The system being based on their complete record of the financial transactions discloses correct profit or loss, okay, for a particular period, maybe in a financial year, and also exhibits a true financial position of the business on a particular day. So the two types of accounting systems are maintained: cash system, mercantile system. So next one, single entry, double entry system of accounting. So as a single entry system of accounting is a form of bookkeeping. It is not a scientific method in which each of the company's financial transactions are recorded in a single entry in a log. The process does not require formal training and is usually used by new small business because of its simplicity and cost effectiveness. Everyone are making the single entry system. A single entry system record the date, description, the value of the transactions, or and whether it is an income or expenses, and then the balance sheet balance. This is done for every transactions of the company is involved in. Depending on the business, some may also include the tax amounts. So this also one form of accounting. It is not a systematic. So here another one way of double entry system of accounting. Double entry, most business, even most small businesses use double entry system of bookkeeping for their accounting needs. Two characteristics of double entry bookkeeping are that each account has two columns and that each transaction is located in two accounts. Two entries are made for each transactions. A debit is one account and a credit is another account. So every transaction are having two accounts, two aspects. So two sides we can manage two accounts. Debit one side and credit is another side. An example of a double entry transactions would be if the company wants to pay off a creditor. The cash account would be reduced by the amount of the company owes the creditor that is to be paid. That would be the debit. Then the double entry reduces the amount of the business now owes to the creditor account as it has received from the amount of credit the business is extending. That is the credit. So the two entries are very important. So double entry system is a scientific method. Every transaction are having two aspects, one in debit and a credit. So all the things are properly recorded. We can maintain the books for only double entry system. Meaning and features of accounting principles. For searching of goals of the accounting profession, for expanding knowledge in the field, a logical and a useful set of principles and procedures are to be developed. We know that while driving our vehicles, follow a standard traffic rules. Without adhering traffic rules, there would be much chaos on the road. Similarly, some principles apply to accounting. Thus, the accounting profession cannot reach its goals. In the absence of the set rules to guide the efforts of accountant and auditors, the rules and the principles of accounting are commonly referred towards the conceptual framework of accounting. So the basic principles of accounting is very important for all the peoples like commerce background or accounting background or non-commerce and a non-accounting majors. So here accounting principles have been defined by Canadian Institute of Chartered Accountant as the body of the doctrines commonly associated with the theory and the procedure of accounting serving as an explanation of current practices and as a guide for the selection of conventions or procedures where alternative exists. Rules governing the formation of accounting axioms and the principles derived from them have arisen from common experience, historical precedent statements by individuals and professional bodies also. And regulations of government agencies, they are given the full definitions by Canadian Institute of Chartered Accountant. And the next, according to Hendrickson, 1997, accounting theory may be defined as logical reasoning in the form of a set of broad principles that provides a general frame of reference by which accounting practice can be evaluated and guide the development of new practices and procedures. So every time there are accounting standards, so institute ICMA also they given that standard practices, rules, regulation are published. Theory may also be used to explain existing practices to obtain a better understanding of them. But the most important goal of accounting theory should be to provide a coherent set of logical principles, then form the general frame of references for the evaluation and developing the sound accounting principle. So we know that basic principles of accounting. So another definitions, American Institute of Certified Public Accountants has advocated the use of the word principle in the sense in which it means rule of action. It discussed in the generally accepted accounting principles as follows. Financial statements are the product of a process in which a large volume of data about aspects of the economic activities of an enterprise are accumulated, analyzed, and reported. So all the economic that process should carried out in conformity with generally accepted accounting principles. Every accountant should know the same principles of accounting. These principles represent the most current consensus about how accounting information should be recorded, what information should be disclosed, how it should be disclosed, and which financial statements should be prepared. They are given detailed information. Thus, generally accepted principles and standards provide a common financial language to enable informed users to read the interpret financial statements. Generally accepted accounting principles encompass the conventions, rules, and the procedures necessary to define accepted accounting practices in a particular term. Generally accepted accounting principles include not only broad guidelines of general application, but also detailed practices and a procedure. Sources AICPA, Statement of Accounting Principles Board. Number 4, Basic Concepts and Accounting Principles underlying Financial Statement of a Business Enterprise. October 1970, page number 54. They are given that American Institute of Certified Accountants, how to maintain. So, according to Dictionary of Accounting prepared by Professor P.N. Broll, accounting standards refer to accounting rules and procedures which are relating to measurement, valuation, and disclosure prepared by which bodies as the Accounting Standards Committee of a particular country. So, India is also having ASC, accounting standard committees. So they are also preparing rules and guidelines for accounting for particular countries. Thus, we may define accounting principles as those rules of action or conduct which are adopted by the accountants universally while recording accounting transactions. Accounting principles are man-made. They are accepted because they are believed to be useful. So the principles are very important. The general acceptance of accounting principles usually depending on how well meets the following three basic norms: usefulness, objectiveness, feasibility. So, a principle of useful to the extent of that the results of a meaningful or relevant information to those who needs to know about the certain business. In other words, the accounting rule which does not increase the utility of the records to its readers is not accepted as an accounting principle. A principle is objective to the extent that the information is not influenced by the personal bias or judgment of those who furnish it. Accounting principle is said to be objective when it is solidly supported by facts. Objectivity means reliability, which also means that the accuracy of the information reported can be verified. Accuracy is very important for the accounting. Accounting principles should be such as a practicable principle is feasible when it can be implemented without undue difficulty or cost. Although these three features are generally found in accounting principles, an optimum balance of three is struck at some cases for adopting a particular rule as an accounting principle. For example, the principle of making the provisions of doubtful debts is found on feasibility and usefulness, though it is less objective. This is because of the fact that such provisions are not supported by any outside evidence. So the rules regarding principles. So and continuation in dealing with the framework of accounting theory, we are confronted with a series of problems arising from differences in terminology. A number of words and terms have been used by different authors to express and explain the same idea or notion. The various terms used for describing the basic ideas are concepts, postulates, propositions, assumptions, underlying principles, fundamentals, conventions, doctrines, rules, axioms, etc. These are principles. Each of these terms is capable of a practice definition, but the accounting profession has served as to give them loose and overlapping meanings. One author may describe the same idea or notion as a concept and another as an convention, and still other are postulate. So convention and a concept is very important. For example, the separate business entity idea has been described by one author as a concept by another author as conventions. Is a better year for us not to waste our time to discuss the precise meaning of generic terms, as the wide diversity in these terms can only serve the confuse the learner. We do feel, however, that some of these terms, ideas, have a better claim to be called concepts, while the rest is should be called conventions. So concept, conventions, idea, they are very important. The next part, the concept are used to connote the accounting postulates, that is necessary assumptions and ideas which are fundamental and to accounting practice. In other words, fundamental accounting concepts are broad general assumptions which underline the periodic financial statement of business enterprise. Periodical means for monthly or quarterly or yearly. The reasons why some of these terms should be called concepts is that they are basic assumptions and have a direct bearing on the quality of financial accounting information. The term convention is used to signify customs or tradition as a guide to the preparation of accounting statements. The following are the important accounting concepts and the conventions are: accounting concepts, separate business entity concept, money measurement concept, a dual aspect concept, going concern concept, accounting period concept, cost concept, matching concept, accrual concept, realization cost concept. These are comes under concept. Convention of materiality, conservatism, consistency. These are comes under conventions. So accounting standard, they are given the what are the concepts and what are the conventions. So process. So here accounting process, introduction, economic transaction or event of a business which can be expressed in monetary terms should be recorded. Traditionally, accounting is a method of collecting, recording, classifying, summarizing, presenting, and interpreting the financial data of an economy activity. This series of business transaction occurs during the accounting period, and its recording is referred to an accounting process mechanism. An accounting process is a complete sequence of accounting procedures which are repeated in the same order during each accounting period. No need to change the orders in one year to any other or any particular year. The same procedures to be followed. So now accounting standards are giving the same procedure to be followed. Therefore, accounting process involves the following steps: identification of a transaction, and the accounting only financial transactions are recorded. A financial transaction is an event which can be expressed in the terms of money and which brings changes in the financial position of the enterprise. The money is very important. An event is an incident or a happening which may not bring any change in the financial position of a business enterprise. Therefore, all transactions are events, but all events are not transactions. So every events are to be recorded. The transactions is a complete action to an expected or possible future action. So it is true data to be given in the statement. In every transaction, there is a movement of value from one source to another. For example, when goods are purchased for cash, there is a movement of goods from seller to the buyer and a movement of cash from buyer to the seller. We can buy the product from the market, we can pay the prices. So cash transfer from buyer to the seller, the goods are transferred from seller to the buyer. So the transaction is very important. Transactions may be external, between a business entity and a second party. That is, goods sold on credit to hurry or internal do not involve second party. Example, depreciation charged on the machinery. So that information relating to the particular party only. No need to involve any other peoples. For a illustration, state whether reasons the following events or transactions are not Mr. Nikhil, proprietor Delhi Computers. Mr. Nikhil started a business with a capital brought in cash 40,000. So he's also invested in 40,000 as capital. He paid salary to staff, expenses 5,000, purchased machinery for 20,000 cash, place an order with Sen and Co for goods worth rupees 500, open a bank account by depositing 4,000, received passbook in a bank, appointed a Sogan as a manager for salary for 4,000 per month, received interest from bank rupees 500, received a price list from Lalit. So how to the transactions, the following events or transaction. So here the each event considered from the view of Mr. Nikhil's business, those events which will change the financial position of the business of Mr. Nikhil should be regarded as a transactions. It is a transaction because the changes in the financial position of Nikhil's business. Cash will be increased by rupees 40,000 and the capital will be increased by 40,000. So the cash are transferred to in the form of capital. So the capital was introduced by the proprietor, Mr. Nikhil. Next, it is a transaction because second, changes in the financial position Nikhil's business, cash will decrease for 5,000. The reason is the salaries, those expenses are increased. The 5,000 rupees are they transferred to the salaries account. Next, it is a transaction because the changes in financial position, Nikhil business machinery comes in and the cash goes out. So purchase of machinery for 20,000. So machinery account, machineries are coming the business, cash is also outgoing. And sixth one, it is not okay. It is sixth. It is not a transaction. Okay, because it does not change the financial position of business. So here, what is called place an order for Sen and Co for goods 5,000. It is a placing order. They are not received the goods from the supplier. And next one, the transactions. Okay, it is a transaction because the changes in the financial position of business. Bank balance will increase 4,000 and the cash balance will be decreased. So here, opened a bank account by depositing rupees 4,000. The bank account will be increased by 4,000. The cash balance will be decreased. And sixth one, it also not a transaction because it does not change in financial position. Received a passbook. That is only normal transactions. Next transactions, seventh one is also not transaction because it does not change the financial position of Mr. Nikhil. Seventh one, appointed Sogan as a manager, appointed only, not paid the salaries. And eighth one, it is a transaction because the change in financial position of Nikhil business. So he received interest from bank. So that the bank account increased. So changes of the financial position. And it is not a transaction because it does not change the financial position of Mr. Nikhil. They received a price list. Okay, these are some entries are related to the business, some entries are not related to the business. So next, recording the transaction, classifying, summarizing, analyzing, interpretation, and reporting is another one form. So here the important of our equations. Dual concept states that for every debit there is a credit. Every transaction should have two-sided effect or to the extent of the same amount. The concept has utilized in accounting equation, which states that at any point of time, assets of any entity must be equal to the total owner's equity and outsiders liability. In other words, accounting equation is the statement of equality between the assets and the sources which finance the assets is expressed as assets equal to sources of finance. Assets may be tangible, that is land, building, plant, machinery, equipment, furniture, investment, cash, bank, stock, and debtors, etc. Intangible, patent rights, trademarks, and a goodwill. So the two types of assets are to be maintained, tangible and intangible. So sources include internal, that is capital provided by the owners, and the external liabilities. Liabilities are the obligations of the business to others or outsiders. The above equation gets expanded assets equal to liabilities plus capital. So outsiders liability plus own capital equal to assets. So the equation is very important. Next equation, all transaction of a business can be referred to this equation. Assets equal to liability plus owner's equity. The further explanation of transactions, revenues, expenses, losses, and gains, the equation can be expanded thus assets equal to assets plus expenses equal to liabilities plus revenue plus owner's equity, or assets equal to liability plus revenue minus expenses plus owner's equity. We can interchange that equations, or assets equal to liability plus owner's equity plus owner's equity. Income, which ultimately becomes an income. The assets equal to liability plus owner's equity. Let us consider the facts of the following cases. So, what are the cases are coming? We can change the equations according to the particular transaction. Following case, step by step, to understand as to how the equation may remains true even in changed circumstances. Number of times we can changes for assets and equal to liability, but something added, something deleted. So that illustration, commenced the business with the cash, purchased goods for cash 20,000 and credit 30,000, sold goods for cash 40,000, costing 30,000, rent paid rupees 500, bought furniture rupees 5,000 on credit, bought refrigerator for personal use. So these are the transaction, how to entering. So first one, business receives cash asset, and it owes rupees 50,000 to be proprietors as his capital, that is equity. So assets equal to liability plus owner's equity. Up here, assets are increased rupees 50,000. No liabilities, liability column nil. So owner's equity equal to 50,000. The first entry is for assets equal to liability plus owner's equity. Assets. Okay. Next transaction, purchased goods for cash rupees 20,000, on credit rupees 30,000. Business has acquired assets, namely goods worth rupees 50,000. Okay. And the other assets, namely cash, has decreased by 20,000, while liability and creditors have been created by 30,000. So the creditors is cash 30,000, creditors 30,000. So the capital already 50,000 are there, and the goods purchased 20 plus 30,000, 50,000. The total assets 80,000. So liability is the same, 30,000, and here owner security no changes. So third part, sold goods for cash 40,000, costing rupees 30,000. So profit earning 10,000 are transferred to 50,000 plus 10,000, 60,000 for owner's equity. So here cash for 40,000 plus cash opening balance 30,000 equal to 70,000, and goods for 20,000 goods for 20,000, total 90,000 are there, and the liabilities creditors 30,000 remain the same. So here the goods is called the cost goods 20,000. Okay, and rent paid. And the transaction has resulted in the expenditure of 500, affecting thereof the cash and equity reduced by 500. So cash already owner's equity 60,000 minus 500, 59,500, and here cash ratio 70,000 minus 500, 69,500 plus 20,000 remaining the same. So that assets 89,500, liabilities no changes, 30,000, equities owner's equity less 500 equal to 59,500. So fifth entry, brought furniture on credit. So credit has to be increased to 5,000. The transaction results acquiring the assets, namely furniture worth 5,000 and increasing credit towards 5,000. So here assets column. So 69,500 already cash balance. Goods 20,000 already balance. Furniture purchased on credit 5,000. Total assets are shown in the column 94,500. The creditors also increased by 5,000, 35,000. Owner's equity the same, no changes. So the last one, bought a refrigerator for personal use, 5,000 rupees. And the transaction will have the effect of reducing both the cash as well as the capital, because the personal use means and drawings. So here cash balance how much? 69,500. Now 5,000 are to be reduced for owner's drawing, 64,500. The remaining assets also same. The total amounts assets available 89,500. So the creditors is same. And here owner's equity 5,000 rupees reduced. 59,500 minus 5,000, 54,500. So this is the transactions for this illustration. Okay. So next one, account. Classification of account, personal account, to 3 columns: natural person, artificial person, representative persons. So 3 types of personal account, and a real account, nominal account. So here what is a personal account? So that accounts which are related to individual firms, companies, cooperative societies, banks, financial institutions are known as personal accounts. The personal accounts may further be classified into 3 categories: natural person, artificial person, representative. Who are the natural person? Accountant of individuals, natural persons such as Akhil's account, Rajesh account, or the name of the peoples. Artificially created by law, banks, financial institution, or for example, Reliance Industries, Punjab National Bank, or any other colleges, or artificially person. Representative personal account, the accounts recorded transactions relating to limited expenses and incomes are classified as nominal accounts. But in certain cases, due to the matching concept of accounting, the amount on a particular date is payable to the individuals or received from individuals. Suppose the amount date is very important. Who is the receiver? Who is the giver is very important. Okay. And such amount relates to the particular head of expenditure or income, represents persons to whom it is payable or from whom it is recoverable. Such amounts are classified as a representative personal account, that is wages, outstanding account, prepaid insurance account, etc. These are the 3 types of personal accounts. So another one, real account. What is called real accounts are the accounts related to the assets and the properties. These may be classified into tangible real account and intangible real account. What are the tangible real assets? Can be touched, purchased, and sold, such as building, plant, machinery, cash, furniture, etc. They are classified tangible. What are the type of assets are not tangible, that is intangible, which do not have the physical shape? Or the accounts related to the intangible assets such as goodwill, trademarks, copyright, patents, we cannot see, we cannot touch. Nominal accounts, some accounts are nominal nature, income, expenses, losses, and gains are classified as nominal accounts. For example, wages account, rent account, interest account, salary account, bad debts account, for purchases account, etc. fall in the categories of nominal account. So we can three types of account: personal account, real accounts, nominal account. These are the basic principles. And how to be classified into divided into what is debit, what is credit. Is basically the debit means they enter an amount to the left side of the account, and the credit means they enter the amount on the right side of the account. In the abbreviations of DR stands for debit. Okay, here they are given the debit. DR stands for debit, CR stands for credit. Both debit and credit may represent either increase or decrease depending upon the nature of the account. Maybe sometimes debit balance increases, sometimes credit balance increases. The rules of for debit and credit are given below. First one, types of account. Second, rules for debit. Third one, rules for credit. What are the types of account? For personal account, real account, nominal. So personal account, debit the receiver, credit the giver. Okay, debit the receiver, credit the giver. What about the real account? Debit what comes in, credit what goes out. Nominal account, debit all expenses and losses, credit all incomes and gains. So these are the basic principles for all the accounting. So, and for example, these are one example. How will you classify the following into personal, real, nominal accounts? For the investments, freehold premises, accrued income, Haryana Agro Industry Corporation, Janata Mechanical Works, salary accounts, loose tools, account, purchase account, corporation bank limited, capital account, brokerage account, toll tax, dividend received, royalty, sales. So these are the some. There comes under the three categories. The first one, investment. Investment is called the real account. We can know that amount, we can touch the amount. And premises, freehold premises also real account. Accrued income to RAM. Ram is a person, so this comes under personal account. Haryana Agro artificial person, so it is also comes under personal account. Janata mechanical work, so mechanical work, the name Janata is comes under personal account. So here wages, that is expenses, it is called nominal accounts. And the loose tools is comes under what is called a real account. Loose tools means some tools relating to the machineries. And purchase account is real account. We know, find out that assets. And a corporation bank account is what is called a corporation personal account. And the capital account is the personal account. Brokerage commission nominal account. And a toll tax account nominal. Dividend received nominal. Royalty account, sales account, there comes under nominal account. So we can find out that type of accounts, how can clarify into different columns. So here next, preparation of journals. Journal is a historical record of business transactions, or even the word journal comes from the French word jour, means a day. That is every day. Day by day, we can record the entries. It is a book of original or a primary written up from the various source of documents. Journal is a primary book for recording the day-to-day transaction in a chronological order, that is the order in which they occur. The journal format: first column date, second column particulars, third column ledger folio, fourth column debit rupees, fifth column credit rupees. So here date column, the column shows the date on which transactions are recorded, the year, month written once till the changes, maybe 1 year or 2 years. Particular column, the first name of the account to be debited, the names of account to be credited, and lastly the narration, brief explanation recording the transaction. Ledger folio column, under this column the ledger page number containing the relevant account is entered in the time of posting. Debit column, under this column amount of debited is entered, credit column under the amount of credit is entered. So these are the important. So next, what is the meaning of journalizing? The process of recording transaction in the journal is called journalizing. The various steps are followed. Journalizing business transaction are given below. First one, ascertain what accounts are involved in a transaction. So here, two accounts are involved: real account, personal account, nominal account. They are involved. We can find out what are the accounts are involved. Ascertain what are the nature of accounts are involved. Ascertain which rule, debit or credit, are applicable, which is debit, which is credit, everything to be find out. Ascertain which account is debited, which account is credited. Record the date of transactions is very important in the del column. Write the name of account is debited, name of the account is credited is very important. Write the name of account is credited. The next line proceed the word to few spaces towards the right to a particular column. Write a narration, that is brief description of the transaction within bracket with the next line of the particulars column. And then last one, draw the line across entries particulars column to separate one journal entry from the another journal entry. Okay, these are the steps. 9 steps are there. Advantages of journals: the transactions are recorded in journal as and when they occur, so the chances of errors is minimized. Okay, sometimes errors are there, double times we are entering, or sometimes omitting to entering, or amount and journal transaction are different, to be minimized. It helps the preparation of ledger, first journals and then ledger. Any transfer from one account to another account is made through journal. The entry recorded in journal are self-explanatory, as it includes narration. Narration also, it can record any such transactions which cannot be entered in any other books of account. Every transaction is recorded in chronological order, date-wise, so that the chances of manipulation is reduced. We can enter the date is very important. Date, particulars, ledger folio number, and which is debit, which is credit. Journal shows all information in respect of transactions at one place. The closing balance of a previous year account related to assets and liabilities can be brought forward to the next year journals. Okay, so that illustration. So following illustrations training Nikhil find out that nature of the accounts also state account should be debited and credited. Rent paid, interest received, purchase of furniture for cash, machinery sold, outstanding salaries paid for Surendra. How to be entering analysis of transaction, name of transaction, account involved, nature of account, debit, credit. So transactions, rent paid, rent, rent account, nominal account, cash paid, cash paid, that is cash real account, that is credit. Interest received in cash, so cash account, real account, interest account is nominal account. So cash account data to interest. So a purchase of furniture account, real account, that is asset. So paid cash account is also real account. So furniture account debit, cash account credit. Machinery sold for cash incoming, received cash. So real account debit, machinery for sold, go out from the business. So it is also credit. Outstanding salary to be paid. Outstanding salary account, salary is a nominal account. So outstanding salary account debit, outstanding salary account personal credit. So salary account debit, outstanding salary credit. Paid Surendra account. Surendra is a person, personal account debit, cash real account. So real account is credit. So the transaction are to be classified into which accounts are involved. Every transaction having two aspects, one in debit and credit. Okay, next illustration, the journal, following journals. 2005 January, Mohan started a business with the cash. January 6, purchased goods from Ram on credit, 30,000. Sold goods on cash, 6,000. bought furniture from Yash to cash 8,000, paid salary to manager 6,500, paid rent to landlord cash 1,000 rupees. So how to entering the journals? Journals, the cash first January 1st cash account data to Mohan capital 80,000 80,000. Okay, so introducing the cash to the capital, being this is called a narration, being business started with the cash. So second entry on 6th January purchased purchase account data to Ram for credit. So purchases 30,000 debit, Ram's account credit, being purchased on credit. Cash account data to sales. So being goods sold on cash. So cash received 6,000, sales credit for 6,000. Furniture assets. So furniture bought on furniture for cash. So furniture account data 8,000. Cash account credit goes to cash go out 8,000. Salary paid. Salary account data 6,500. Cash account credit 6,500. Salary paid to the manager. Rent account data, rent paid to landlord. Rent account data 1,000 rupees to cash account 1,000 rupees. This is for the basic journals account. Compound journals, so one or more entries are to be transferred. So when more than two accounts are involved in transaction and the transactions are recorded by means of a single journal entry instead of passing several journal entries. Such a single journal entry is termed as compound journal entry. Here, paid Arun rupees 2,000, 5,000, 250 by allowed by 50,000, 50 rupees. What is called discount on 1st November. 6th November received from Somesh rupees 1,900 and from Komish rupees 400 allowed discount. Goods purchased for cash 4,000, furniture purchased for cash 3,000, paid cash 2,000, salary paid salary cash 7,600, rent paid the same day, various transactions. So here 1st November only single transaction, 6th November only single transactions, 8th November 1, 2, 3, 4, 5 transactions. How to enter? So here 1st November Arun account data to cash to discount. This is over 5,300, 5,200 rupees paid, 50 discount a column being cash paid to Arun and the discount received 50. And 6th November also single cash account data 2,300, Somesh account to Somesh account to Kamesh account 1,900 being cash received 400 discount. So here these are the single column. So here for 8th November the remaining all the entries are comes under 5 entries. Purchased furniture, purchase account 4,000, furniture account 3,000, Raman's account 2,090, salary account 7,600, rent account 1,400. So cash paid 18,090. So this is called a compound entry. The same date, various entries are to be entered. So here opening entries. Journal entry by means of which the balances of various assets, liabilities and capital appearing in the balance sheet of previous accounting period are brought forward in the books of the current accounting period is known as opening entries. So opening entries for previous period, closing entries are transferred to opening entries. While passing an opening entry, all assets accounts individually are debited and all liabilities account individually are credited. And the net worth, that is excess of assets or liability, is credited to proprietor's capital account in case of proprietor's consent or partner's capital account in case of partnership consent. Illustration: on 1st April 2006, Singh's assets and the liabilities stood as follows. Assets: opening balance cash 6,000, bank balance 17,000, stock 3,000, bills receivable 7,000, debtors 3,000, building 70,000, investments 30,000, furniture 4,000. On 1st April, opening balance. Liabilities on the same date, bills payable 5,000, creditors 9,000, RAMs loan 13,000, pause opening journal entries. Okay. So here the journal entries. Cash account data 6,000, bank account data 17,000, stock 3,000, bills receivable 7,000, data 3,000, building account 70,000, investment account 30,000, furniture. Okay, this is opening on 1st April. What about that credit side? Bills payable 5,000, creditors account 9,000, RAMs loan account 13,000, sinks capital 1,13,000. So total debit balance 1,40,000, total credit balance 1,40,000. So this called opening journal entries. Okay, ledgers. Journal is a daily record of all business transactions. The journal, all transactions relating to persons, expenses, assets, liabilities, and incomes are recorded. Journal does not give a complete picture of fundamental elements of bookkeeping, that is properties, liabilities, proprietorship accounts, and expenses, and income at a glance and the one place. The business transactions being recurring nature, a number of entries are made for a particular type of transactions, such as sales, purchases, receipts, and payments of cash, expenses, etc., throughout the accounting year. The entries are therefore scattered over the journal. In fact, the whole journal will have to be gone through to find out the combined effect of various transactions on a particular account. In case at any time a businessman wants to know how much he has to pay to the suppliers and the creditors, how to find out? The businessman to want to know how to pay, how much he has to pay to the suppliers or creditors. What to find out? Next one, how much he has to receive from the customer. We have to find out what is the total amount of purchases and sales made during a particular period. We can find out the sales account and the purchases account. How much cash has been spent, incurred in various items of expenses such as salaries, rent, carriages, stationery, etc. We can find out that salary account, rent account, carriage account, stationery, that's individual ledgers account. What is the amount of profit loss made during the particular period? We can find out that profit loss account. What is the financial position of a particular date? We can find out the balance sheet. These are the ledgers. So the above mentioned information cannot be easily gathered from the journal itself because the details of such information is scattered all over the journal, all over the information recording the journals. So the journal is very important. In this to direct need to get the summarized or grouped records of all the transactions relating to a particular person or a thing or an expenditure to take managerial decisions. The mechanics of collecting, assembling, and summarizing all transactions of similar nature at one place can better be served as one book is called ledger, that is classified as head of income. So here, ledger is a principal book of account. Accounts of the enterprise. It is rightly called a king of books. Ledger is a set of account. Ledger contains the various personal, real, and nominal accounts in which all business transactions of the entity are recorded. The main functions of ledger is to be classify and summarizes all the items appeared in the journal and other books of original entry under appropriate head or set of accounts, so that at the end of the accounting period, each account contains the complete information of all the transactions related to it. So not incompleted information. A ledger, therefore, is a collection of account and it may be defined as a summary statement of the transaction relating to person, asset, expenses, and income which have taken place during a given period of time, shown the net effect. So these are the format of ledger: date, particulars, journal, folio number, Okay, this is called the debit side and the credit side. Okay, this is very important. The main utilities of ledger account is summarized as under. It provides a completed information about all accounts in one book. It enables ascertainment of main items of revenues and expenses. It enables the ascertainment of the value of assets and liabilities. It facilitates the preparation of final accounts. Format of ledger. Form 1, name of the account, debit side, credit side. Okay, D or debit, C or credit. So that ledger is in two sides. One in debit side column, date particular journal amount. Here, date particular journal folio and amount a column. So debit side and the credit side. The another name, date particular journal folio, amount debit, amount credit, credit debit balance. This another form. The posting refers to the process of transferring debit and credit amount from the journal or subsidiary books to the respective heads of accounts on the ledger. Journal will have the minimum of one debit and one credit of each transaction. The ledger will have either the debit or credit in each account is used as a journal, maybe in the debit side column or the credit side column. Posting may be done daily, weekly, fortnightly, or monthly according to the convenience and requirements of the business. Anytime we can post the ledgers and find out the balance for the particular income. Okay, before preparation of final accounts. So the procedure of posting the ledger, first entering the date of the transaction and account ledger for the each person, assets, revenue, liabilities, and the appropriate columns like debit journal and credit journals and different type of account. Here also debit posting should be prefixed and the word to, and the credit posting to be prefixed by. The journal folio column page number of the book of original entry journal is entered. This is explained with the following examples. So here various examples are there: date, particulars, ledger folio number, and amount. Okay, these are the type of ledgers are open in. What are the ledger? Uh, First ledgers, Ravi's account, sales account. So here stationaries and stationaries account, salaries account, rent account, wages account, cash account. So here next one is a trial balance, a journal, ledger, and a trial balance. So the trial balance is two columns scheduled listing. The titles are the balances of all the accounts. Uh, in which they appear in the ledger. Objectives of preparing trial balance, check the arithmetical accuracy of books of account, helpful the preparing the final accounts to serve an aid to the management. Method of preparation of trial balance, total method and balance method. So here the trial balance for that serial number, name of the account, balance credit, balance debit. So first preparation of journal and post them ledger, the closing the ledger account, the closing balance are transferred here, debit balance or credit balance are entering here, the ledger account. So the trial balance. So this is called a trial balance. So here the debit side balances for 2,17,000. The credit side balance are also 2,70,000. So total debit equal to credit. So that cash in hand, cash account, purchase account, wages account, establishment expenses, sales return. These are the individual ledgers. Okay, so that is called answers. So accounting errors. So sometimes errors are occur, clerical errors or errors of principle. So the real account transfer to nominal transfer to personal account. Some accounts are to be, some errors are occur during the preparation of trial balance. The trial balance is to find out the errors. And final accounts, trading account, manufacturing, profit loss account, balance sheet. This last three accounts. What is a trading account? After the preparation of trial balance, the next step to be preparing trading account. Trading account is one of the financial statement which shows the result of buying and selling of goods and or services during the accounting period. The main objective of preparing trading account is to ascertain gross profit or gross loss. Trading account find out the gross profit or loss. Gross loss. Manufacturing account, the manufacturer prepared the enterprise engaged in the manufacturing activities. It is prepared to ascertain the cost of goods manufactured during the accounting period. This account is closed by transferring the balance to the debit side of the trading account. First manufacturing account and a trading account. Manufacturing account to find out that finishing product. The finishing product transferred to trading account, the debit side column. Profit loss account, the trading account results in the gross profit or loss made by the businessman in the purchasing or selling of goods. It does not take into consideration on other operating expenses incurred by him during the running of business. Besides, the businessman may have the other sources of income. That is indirect income, indirect expenses to find out the true profit, or that is called a net profit. Profit loss account considers all such expenses and incomes and gives the net profit made or net loss suffered by the transfer. What are reasons for find out the net preparation of profit loss account? You can find out the net profit or loss. Next one, what about the balance sheet? Finally, the balance sheet is a statement of financial position of a concern at a given date. Normally 31st March every year. It is called a balance sheet because it is a sheet of balance of those ledger accounts which have not been closed till the preparation of trading and profit loss account. So the ledger account closed only end of the March, and post them to the trading account. After preparation of trading profit loss account, we can find out that balance sheet. After the preparation of trading profit loss account, the balance left in the trial balance represent either personal or real account. In other words, they either represent assets or liabilities existing on the particular date. Excess of assets or liabilities representing the capital and indicative the financial soundness of the companies. So we can find out the next one called the balance sheet is described statement showing the sources and application of a capital. So it is a statement and not an account and a prepared from real and a personal account. The left hand side of the balance sheet viewed the description of the sources from which the business has obtained and the capital with which the currently operates, and the right hand side of the description of the form in which that the capital is invested in a specific date. So here trading account format. Okay, trading format. This is opening stock, purchases, less purchase return, carriage inward, freight insurance, fuel, power, manufacturing expenses, motive power, and octroi, import customs duty, consumable stores, royalty on manufacturing of goods, packages, packing charges. So here to find out the gross profit. So here sales minus sales return and a closing stock. Okay, and gross loss or gross profit. So this is a trading account. So here one illustration are there. So they are preparing the trading account. So opening stock 1,50,000, purchases cash purchase 50,000, credit purchase 10 lakhs, total purchase 10,50,000, returns purchase 20,000. So 10,40,000 net purchases. Freight 3,000, octroi 2,000, carriage inward 1,000, wages 4,000. So here sales, cash sales 60,000, credit sales 12 lakhs, total sales 12 lakh 60 minus return 20,000. So here 6,400, 12,400 net sales. Closing stock 84,000. So the credit side balance is 13,24,000. So the balance of gross profit 1,24,000 transfer to profit loss account. Hello, we'll try to complete. So here manufacturing account, the same thing for opening work in progress, opening stock, purchases, carry inward, freight, and the wages, salary, all other relating to the manufacturing of product, in a sale of scrap and the closing stock in work in progress, and a goods transfer to trading account. So here the illustrations are there, the manufacturing accounts and a profit loss account and marshalling assets liability. So here the last one, balance sheet. So liability side, asset side, two sides of the balance sheet. Current liabilities, bills payable, sundry creditors, bank overdraft, long-term liability, loan from bank, debentures, and a fixed liability is called capital. So here liquid assets, cash in hand, cash at bank, floating charges, assets, sundry debtors, investment, bills receivable, stock in trade, prepaid expenses, fixed assets, machinery, building, furniture, fixtures, motor car. Fictitious assets, advertisement, miscellaneous expenses, profit loss account, intangible assets, goodwill, patent, copyright. So we can see the balance sheet in format. So this is called performance, fixed liabilities, long-term liability, current liability, intangible assets, fictitious, fixed, floating, liquid assets in order to performance of the balance sheet. Another format. So this is for the illustration for the preparation of the balance sheet. Closing entries are there, and a trading profit loss account, and a balance sheet of that assets, creditors, bills payable, capital. So creditors 9,825, bills payable for the liabilities, and the capital for the March 8,950, a net profit to be added. The total capital 21,550, total liabilities 32,875. So here, what are the assets? Cash in hand 250, at a bank 2,375, bills receivable 2,225, stock 12,500, 15,000 sundry debtors, 500 rupees for office expenses. Okay, the conclusion of this session was only for that basic principles of what is called accounting principles of beginners, and all the rules and the regulations are explained, and up to the balance sheet model, and for the due to for the time, okay, insufficient time, we cannot complete. For adjustment entries are there. Okay, thank you very much. Hello. Thank you, madam.
Thank you, sir.
Thank
We
you,
are
madam.
really enlightened with your knowledge and presence, sir. Thank you very much, sir.
Thank you, madam.
As all good things come to an end in life, now we come to end of the session. Before that question and answer session, we are now going to begin the question and answer session. So one question is there.
Okay, ma'am.
What is the difference between financial account and management account, sir?
So that is basically financial account is find out the net profit and the losses only. So the management account to find out that reasons for that financial statement, giving the information to the management for performance of assets. That is a different. So management account is based on the financial reports. So sometimes continuous losses or sometimes continuous profits. The management accountant to duty to preparation of reports and send the reports to the management for taking the decisions on the basis of financial aspect. So financial account only for find out profit or loss and the balance sheet. Okay, ma'am. Both are
Sir.
different.
Okay, sir. Thank you, sir.
Okay,
So one more question is there.
Okay.
What is the usage of single entry system, sir?
Single entry system not a usage, ma'am. Only in the single entry system to be converted into double entry system. Single entry system for the primary records. We are using the daily entries for receipt of amount and expenses and other things to be noted roughly. This is not a use, not to find out the profit or loss and preparation. So if the forms for preparation of single entry system, that accountant to converted into double entry system. After find out the conversion, we can find out the actual financial position of the firm. Single entry system not in use.
Okay. Thank you, sir. Thank you, sir.
Okay, ma'am. Thank you very much, ma'am. Sujata, ma'am. How are you, ma'am? Thank you, ma'am.
I'm fine, sir.
Oh, thank you, ma'am.
Okay.
எப்படி மேம்? ஓகே மேம், தேங்க்யூ மேம்.
நல்லா எடுத்தீங்க சார்.
இன்னும் கொஞ்சம் இருக்கு மேம், டைம் பத்தல மேடம்.
நிறைய எடுத்தீங்க.
ஓகே மேம்.
Okay, sir.
Thank you.
So session handover to Program Coordinator, Mr. U. Murugavel, sir, Assistant Professor, Department of Computer Science, to propose the vote of thanks.
Good afternoon to one and all. It's my privilege to propose the vote of thanks. First of all, I thank the management and principal for giving permission to organize such a webinar, Basic Accounting Principles for Beginners, in an effective manner. Thank you, sir. Our special thanks goes to the chief guest, Mr. S. Rajendran, Professor, PG Department of Commerce, Sindhi College, Chennai 77, is with us in spite of his busy schedule. Thank you very much, Professor Sir, Mr.
Thank you,
S.
sir.
Rajendran Sir.
Thank you.
Thank you for
sir.
delivering a wonderful webinar, sir. It was a useful
Thank
webinar,
you.
actually.
Thank you,
sir. I also thank Mr. T. Sujata Madam, HOD, Department of Computer Science, and Dr. K. Geeta Madam for organizing this webinar to be a successful one. I thank all the HODs, faculty members, and students of Sindhi College who have attended this webinar program. Finally, I thank all the participants from all over the India for their patience in watching this webinar. Thank you, one and all, who have gathered here for this national webinar. Thanks to all.
Thank you.
Thank you, sir.
Thank you, sir. Dear participants, we send the feedback link in chat box. Kindly fill the feedback. You'll receive the e-certificate shortly to your mail. I request you kindly stand for national anthem.
Not audible, ma'am. Ma'am, not audible. Audio இல்லையப்பா. Okay.
Okay. Thank you, sir.
Thank you, ma'am.
Thank you, sir.
Okay. Thank you, sir. Thank you, Murugal. Thank you.
Thank you, sir.
Leave ஆயிடலாமா? Okay.
Okay, sir. Thank you.